Hello, everyone. My name is Don Harkey, and I am the CEO of Centric Consulting Group. We're a national firm that works with organizations and businesses on developing their culture. Over the past few weeks, we've been talking to lots of different business owners and organizational leaders who are forced to be making a lot of difficult decisions right now. So we wanted to bring you some experts to equip you with options and resources to help you to better make those decisions. Now, before we get started, if you're watching this live, you'll have the opportunity to actually enter some questions into the chat box. We suggest that you make your questions visible both to panelists and attendees in the audience so everyone can be part of the conversation. And we're going to watch those questions. We probably won't get to all of them, but we will watch those as we go. So our goal for this, before we really jump in, is to not to answer every question that you have. These questions can be complex and they're going to be very specific to your organization. But rather, we want to arm you with information so that you can work with your banker and your accountant to intelligently set up the right strategy that works for you. We're not offering any legal or financial advice, and some of this information is dynamic, meaning it changes, and guidelines and interpretations are shifting almost daily right now, and probably will be for over time. So be careful of that. In other words, we want you to engage your professional advisors and make your own decisions about what to do next. So now, I'm proud to introduce Crystal Reynolds Roberts. Crystal Reynolds Roberts is a partner at Pinnacle Consulting CPAs in Springfield, Missouri. Crystal has a Bachelor of Science in Accounting and Business Management, as well as a Master's of Accountancy from Missouri State University, go Bears, and has worked in public accounting for 20 years. She has also served as the Chief Financial Officer and Chief Operating Officer in various organizations. Crystal, welcome.
Thanks, Don. I'm glad to be here today.
Yeah, I appreciate you having us. Crystal and I have known each other for a long time, so it's always fun when we get together and chat. So she doesn't really hate me. We actually get along really well.
Yeah.
So
I agree with that.
Yeah, right on. You have to because we're on the video now. So first, let's jump right in, but let's start off at a high level before we jump into all the details and things that are out there right now, because there's a lot that we want to get to. What are the kinds of difficult decisions you're seeing your clients have to make right now in organizations?
Well, every client is a little bit different, but in general, because some are considered essential and some are considered non-essential, some people literally cannot go to work right now. So a dental organization is a really great example of that. The American Dental Association is recommending that all dental practices be closed. However, there's been guidance in the last few days saying that they can see patients for routine cleanings, but no emergency items that are for cosmetic reasons, like updates to orthodontics. So every business is a little bit different. The majority of clients are trying to determine whether or not they can keep their people employed, whether or not they're going to have business going forward, how they're going to get additional revenue dollars in the door if they have to have people in the building to be able to do so. And of course, most of them want to keep their people employed there, but if you don't have the revenue to support it, they may just not be able to.
Yeah. I think a lot of people who aren't business or organizational owners don't realize how much revenue or how much expense payroll is. And so
Absolutely.
A lot of them are making these really tough decisions and making it painfully. So you're not alone in this if you're watching this and thinking, I'm going through this. Am I the only one having to work through this? No, you're absolutely not alone in this.
No, there's lots of hard choices being made every day.
Yeah, absolutely. So let's kind of get the lay of the land here a little bit. You know, the government has just passed the CARES Act, a $2 trillion bill. That's a lot of money, obviously, that's going to flow into the economy and the resources that are available for businesses. But even before the CARES Act, there were some stipulations put into place, both at a national and state level. Can you give us kind of a high level perspective of what some of those important aspects of some of that relief looks like for businesses and organizations?
Absolutely. So the initial documentation that was passed included mostly the EIDL loans. It stands for EIDL, and it's for disaster loans. That was the very first thing that they passed before the CARES Act was introduced into the Senate. That was initiated to give businesses the opportunity to apply for an emergency loan where they could receive up to $10,000 within 3 business days that they may have to pay back and they may not. Since then, President Trump signed the CARES Act on March 27th, which gave a lot more options. So within the CARES Act, there are a lot of provisions that apply to businesses. There are also a lot of provisions that apply to individuals. There is Do you want me to go into those details, Don,
Yeah,
now?
talk a little bit about that. Yeah, let's get the lay of the
Okay.
land.
So within the CARES Act, there is the PPP, which stands for the Payroll Protection Plan. There's also expanded unemployment benefits for individuals that are going to be paid by the federal government on top of state unemployment benefits. There are also expansions to the initial EIDL loans, again, EIDL. There are additional credits available for payroll taxes. There are additional credits available. Well, they're not credits. Let me rephrase. There is the ability to postpone payroll tax payments. Those payroll tax payments that you choose to postpone may or may not be available for the 50% credit. So that's also a whole nother item that we'll have to contend with. There is an expansion of FMLA leave. There are special provisions if you have an employee who receives diagnosis of the coronavirus, and that's just the tip of the iceberg.
Yeah. So, I mean, there's all these different things that are out there. So one of our goals is just to let you know that that stuff's out there, because I think sometimes if you don't know even what question to ask. So when you're meeting with your accountant or your banker, you can't ask, oh, there's things in there. If you have employees that get sick, if they care for people who are getting sick, there's lots of options that are out there. So let's dive into, you mentioned the PPP. That's part of the latest CARES Act that went through, the Payroll Protection Program, or PPP. Tell us a little bit about who's eligible for that and what it does.
Okay, so the initial intention of the Payroll Protection Plan or program is to provide businesses or independent contractors or those that are self-employed and have a Schedule C with income to provide wages, in essence, for 8 weeks worth of pay. Now, the provision is not very clear, and because you only get to pay people for 8 weeks worth of pay, and that money has to be spent in 8 weeks. But the formula for that calculation is actually 2.5 times monthly payroll. So that's where it gets confusing for some people. So that half times extra that you get can be used for rent payments, utility payments, interest on mortgage loans. It can also be used to pay for people that you've hired in 2020 that were not employed in 2019. Every bank is handling this just a little bit differently. And so the amount that you're going to be eligible for will be determined by your local bank.
Yeah. Okay. And so it's a loan, right? I mean, we talk about the forgiveness side of things, but initially it's a loan.
It is absolutely a loan. So what you do is you calculate your average monthly payroll cost from the prior year. You take it times 2.5, and that's how much you apply for in your loan amount. Then after the loan is initiated, you get the next 8 weeks to pay for the items that the loan was given to you for in the first place. If you do not spend it on approved items, then it may not all be forgiven. The amount that is not forgiven is going to be repaid over a 2-year window, and every bank is issuing different interest rates at this time. As Don said in the beginning, the rules are changing every day. Today opened the day where businesses, so S Corps, partnerships that have wages, C Corps that have wages, you can all apply today on April 3rd. And then this morning, the SBA issued a new loan application. So it is changing very, very quickly.
Yeah. That's why it's really important to be in constant communication with your banker. They're getting this information too as it comes in, and trying to respond quickly about how they talk to folks and trying to manage their own risks as banks and all of that stuff. So it's really important to stay on top of things. And even some things that we share in this video might not be up to date in an hour, or things are happening just constantly. So keep up to date with that. You talked about the payroll calculation, 2.5 times your payroll. But when they say payroll, it may not mean what we think of as payroll as business owners, right? So talk a little bit about what's included or not included in that.
Okay, so what they're including in payroll costs are the cost of actually paying each of your employees, plus the cost of employer paid health insurance, plus the cost of any retirement match. There is debate at this time about whether or not payroll taxes will be included in that. They're saying that state taxes are included, federal taxes are not from some banks. Some banks are including all payroll taxes as long as it is employer paid and not the amount that's withheld from employees' checks. So that has yet to be clarified.
Yeah. Talk a little bit, we were talking about this yesterday. Talk about why it's different from bank to bank. How do we pass this big law nationally and then it's interpreted differently from bank to bank, location to location?
Okay, well, at this time, since every bank that is an SBA lender is in a different SBA region, that bank has to reach out to their regional SBA to get their lending guidelines. Every regional SBA is giving out their current interpretation of the CARES Act. And so you might have a bank on one corner who has a 0.5% interest rate over the 2-year repayment, and the bank across the street might be charging 1%, though the CARES Act states that the maximum amount they can charge is 4%. And so I can assure you that it will not be greater than that. But every bank is just a little bit different. I genuinely think that as this continues to progress and people continue to apply after today, that it will become more uniform. And there's even a chance that they'll get that uniformity completed prior to the loan origination dates.
Yeah, okay. So watch that situation, it's dynamic. I know a common question is a lot of people have 1099 employees or freelance employees. Do those get included in that payroll calculation?
They don't. So if you're not issued a W-2 wage or you do not pay them with a W-2 wage, they are not included in your calculation for this. The reason for that is because the CARES Act allows for them to apply on their own. And so beginning April 10th, which is next week on Friday, that is when loan applications will open for independent contractors and anyone that has a Schedule C. The SBA has yet to release any guidance on what documentation they will require, although we do know that if you received a 1099 in 2019 that you were planning to use on your tax return, they will need that. That's the only piece of information we have as of today.
Okay. Well, that's good to know, at least that for those of us who do have some 1099s or freelance people that we use, that's not included and why. And that's not an interpretation thing. That's pretty hard that's not going to be included.
Correct. And the reason that they've put such a hard line on it is just it would give those people the opportunity to be paid twice, and that's not the intention of the act.
Right. And you'll see that theme over and over again. They try to find those loopholes of, well, can I apply for this and this? And we're going to talk about that too at the same time, because I know it's a common question. But one of the things about PPP that's got people excited or very interested in it is that it can be forgiven. Talk a little bit about what we need for the loan parts to be forgiven.
Okay, so again, every bank has issued separate guidance on that for now. But what we know is that you'll have to be able to prove that you spent that money on your employees' pay for 75% of the total loan value. Now, there's also rules, and this gets really confusing because they've got 75% in there, a multitude of places. But you also cannot decrease any individual employee's pay by greater than 25%. So those employees must receive 75% of the amount that they were being paid on February 15th during this 8-week period for that portion of the loan to be forgiven. So a lot of businesses are choosing to do a 4-day work week where they have them work from home for 4 days and then they're off on Fridays or Mondays. Some places do rotating days. But they'll have them do 75% of their work in 4 days so that they can reduce their overall payroll costs and potentially have more of this PPP loan that they can use to pay for things like rent and utilities while still keeping their people partially employed. There are a lot of different ways that we can go about using these funds. But the truth of the matter is, if you want it to be forgiven, you must use it for the reason that it was originally intended. And its true intention is to keep people employed as much as possible for 8 weeks.
So that's I think you outlined a potential strategy that folks could have. I think a lot of times when you look at payroll, you start to think, who do I need to cut if I really need to cut expenses? but these cross the board cuts are possible and still maintain. Now, are you still, if you bring people to a 4-day week, do they still count as the same number of FTEs at the end of the
They do.
Okay.
As long as you don't cut their pay by greater than 25%, they still count as a whole job, which is how they're calling it on the application. When you get the application, there's a box that literally says number of jobs. And that's the equivalent of your full and part-time people. You do not convert it to an FTE for full-time only. You just include the total number of people, even part-time people.
Okay. As organizations think about applying what they're paying this loan for, how do you recommend them keeping track of that?
Well, a lot of banks are actually requiring that they have a separate bank account. And I think that is a great plan. So with the bank where you get your loan, you can request that they open a separate bank account at that bank and make the deposits there. Then the easiest thing to do is to continue paying payroll wherever you've had it from before so that you don't have to change direct deposits. And you can just make a transfer directly out of the loan bank account into your business bank account for the exact amount of your payroll. You can then get a few checks and make your rent payments and your utility payments out of that loan bank account. But what everyone needs to know is that if the loans are not forgiven, you can pay them back immediately with no penalties and no interest as soon as that 8 weeks is over. So it would be very easy for you to know whether or not you had utilized all the funds as you originally intended, because the balance remaining in that separate bank account is the amount that you would give back to the bank.
Right. Then you have the option to either pay it off or use the loan for other things, which then you would just have to pay it off based on the terms that the bank gave you.
Absolutely.
Right. And when does the clock start on that 8 weeks? Does that start as soon as you receive the money, or can you select when that starts?
Okay, so this is another provision within the CARES Act that has yet to be clarified. The loan application that they released this morning specifically says that it has to be spent in the 8 weeks following when you receive the loan. But that is not what the CARES Act says. The CARES Act says that it starts on the period beginning February 15th. So we're waiting on clarification for that.
Okay. So it's possible that you could even make it be retroactive and pay for stuff that you've already paid for.
It's possible according to the language of the CARES Act.
Okay.
I've not seen any bank willing to follow the CARES Act to the letter yet. But again, the SBA could modify that loan application for a fourth time as early as tomorrow.
Right, right. So we bring that one up specifically to arm you, not to confuse you, but to arm you with information as you work with your bank in terms of setting that. They might tell you, no, we're going to do it this way. And sometimes you can maybe question a little bit, and negotiate. Some of that stuff might be out there.
Well, there's no reason not to ask. The total amount available, according to the original CARES Act, for the loan forgiveness is $349 billion. And I think it's going to be first come, first serve. So if you have the ability to use the period that begins on February 15th, then your loan could be eligible for forgiveness as early as April 16th. I don't know that banks are going to allow that, but under the act, that could be a plausible option.
Right. And to be clear, that amount of money that you talked about, that $349 billion, is for the forgiveness of the loan, not the loans themselves.
Absolutely.
Okay.
Absolutely.
That's a key. I know that you talked about, what is included in payroll. There's also some payroll exclusions for people who make over $100,000. Am I correct?
There are. So when you go to apply for the loan and you are pulling the total amount of payroll costs that you have, for any employee that earns greater than $100,000, the amount of their compensation that they're eligible for is $100,000 or less. So when you go to do that calculation for your average payroll, you just have to deduct any dollar value that's greater than $100,000. There's been a lot of miscommunication about that. Initially, it was understood or expected that people that made greater than $100,000 were completely excluded, and that's not the case.
Right.
It's just
the first 100,000 is covered.
The first 100,000 is covered. That's right.
And when we say covered, we mean both how much you can borrow and then also how much is forgiven.
Absolutely. It's for both.
Okay.
Absolutely.
What about if you've already done layoffs before you started PPP? How much can you rehire employees back?
Yes, and they actually are encouraging that. So what they're hoping is that it will draw people off of unemployment and onto these PPP plans for that 8-week window. So if you have laid people off already and you have work for them to do, you can bring them back even if they're doing work from home and pay them for that full 8 weeks. When that 8 weeks is over, if they have to go back on unemployment because the stay-at-home orders are still in place and businesses are still not allowed to be open, they can go back on unemployment at that time.
Okay. What if they don't have something to do and you just want to bring them on and pay them for a couple months to ride through it, like use it almost as a pay time off kind of a thing? Is that a strategy that's okay?
That is a strategy that's okay. And honestly, I think the CARES Act is promoting that. I think they want everyone to be employed for as long as possible.
Yeah. So even if your employees are home and you're retail, for example, and they can't really do as much as they normally do, you could still say, well, I'm going to ride this out until we can reopen our shop when the social distancing restrictions are relieved. Then you could bring this in and then use it to pay them to keep them in so that you don't lose them later.
Absolutely. Absolutely.
Okay. How do you go about getting a PPP loan?
Okay. So the first thing you need to do is contact your local bank. Some banks are sending out notices that said that they're only allowing you to apply for the loan if you're a current customer. So the very first thing you should do is contact the bank where you have a current loan or where you have your current business banking account and ask them if they're an SBA lender and ask them if they're doing these PPP loans. In a lot of rural areas, the local banks have not even heard of this yet. And so there's a good chance that you might know more about it than your banker. But once you call them, they'll get up to speed very quickly to try to help in any way that they can.
Yeah. And there'll still be some smaller banks, I'm sure, that will open up and take on some new clients on this. They might just prioritize them a little bit differently, right?
That's exactly what we've heard. So the banks that are willing to do these for new customers said that they would be happy to help after they help their current clientele.
Right. We did have a question just to clarify on the freelance employees piece. The question was, I know that the freelancers are still calculated in the amount of loan that you can get, but how does that impact forgiveness? Can you pay freelancers and still be forgiven that money?
Freelancers are actually not included in the calculation of the amount of loan that you are able to get.
Right.
They are excluded completely.
But what about if you didn't include, so you don't include it in the loan amount, but then you still use the loan amount to pay freelancers? Is that amount
not forgiven? No, it is not forgiven. It is not considered a payroll cost. So that portion would not be forgiven.
Okay.
It doesn't mean that you can't utilize the funds for that. It just won't be eligible for forgiveness.
Right. Okay. And I think that's an important distinction that I think people get confused on, is this is first a loan, and then second, some of it can be forgiven. So you can still get this loan and then use the loan. You could use the loan for anything you want to. They're just not going to forgive you for it.
Well, you're not technically supposed to. If you want to use a loan for anything that you want, then you should apply for the EIDL loan instead of the Paycheck Protection Loan.
Okay.
But I guess in theory,
you
can
spend it whatever you want to. Just do whatever you want. It's probably not the direction we want to go into advice.
No, it's not something I can recommend. No.
Thanks for reeling me in on that. So so be careful. So be aware of what the rules are as you get the money. I love the idea of putting it in a separate account so you can really watch it and you have a really clear paper trail. So that's really important. So definitely watch what that looks like. So let's shift to strategy a little bit, because we've got these different pieces on the board and we have to figure out how to move them a little bit. What kinds of strategies are you seeing businesses and organizational leaders employ right now just to get through this crisis?
Okay, so some businesses are choosing to keep 100% of their people employed at their current level because they are trying to find work for them to do, and they genuinely believe that they'll be open again after the 8-week period. Some businesses are cyclical, and they know that it will take them a window of time to be able to generate additional revenue even after they open. And so they're choosing to lay off a portion of their employees immediately so that they can reserve cash flow and continue to pay their other operating expenses at the same window of time. So there are a lot of different approaches when you go to utilize this money, but it really depends on how you think you'll fare once the social distancing is lifted.
Yeah, that's really key, right? Is what do you think's going to happen next? Which, by the way, if you know, please call us and tell us,
Yeah.
because I think anybody really knows. But
No.
there's businesses that will be able to almost flip on a switch. I know, like some of them, like dentists and things like that, who haven't been seeing patients, are getting backed up, and so they're going to get this flood of people coming to them, hopefully.
Right.
Open up the spigots, but some other things, but they won't turn on quite so quickly. So that's a big consideration.
No, they won't. Businesses that have long lead times, like engineering projects or construction companies, they may not see any new projects come in right now. And businesses won't start those new projects for an extended period of time.
Yeah. Another thing I think to be aware of, I know that we've heard some clients talk about, is that the reality is you may not lose some clients, especially professional services businesses, but you might start getting slow paid a little bit as this impact goes through everybody. So that's another thing to keep in mind, right?
Absolutely. Yeah, the cash flow will be really important to manage during this window. In the last 3 weeks, since all of this has really started and the social distancing has been implemented in most places, the majority of our clients have not seen a slowdown in pay yet. So I really think that's going to be happening near the end of April and for the whole month of May.
Yeah.
So if you can plan for that now, which will be in that 8-week window, you'll have a lot more opportunities to make educated decisions.
Yeah. Are you seeing any clients asking for some payments up front, offering discounts to try to get some more cash in the bank? Like if you have a service that's like a per month and offering it up front in a bundle, are you seeing some strategies like that?
We are seeing strategies like that, yes. And a lot of businesses have offered that for an extended period of time when you're having product delivered. 210 net 30 is a really common one. But we're seeing people offering 20% discounts for paying today.
Okay. Yeah.
Mm-hmm.
That's another strategy you can use to potentially build cash. If you've got some clients that are not being as impacted right now and are cash rich, so to speak, you could you could give them some deals and they could use the cash they could save some money, and then you could get some cash early on.
Absolutely.
That's a great strategy. So that's the PPP loans that are out there. You talked a little bit about the EIDL loans, and I already see some questions about, hey, can we use the PPP loan for other stuff? PPP is for payroll. You can't use it for anything. It's for payroll and the things you talked about, the mortgage interest, benefits, things like that. But talk about the EIDL loans. What's an EIDL loan and what can that be used for?
Okay, so the EIDL loan is specifically for this disaster, which has been declared by the president. So we can use that EIDL loan for anything within your business as long as you are not doubling up. So a big question I've been getting from a lot of my clients is whether you can apply for a PPP loan and an EIDL loan. And the answer is yes, but you cannot do them simultaneously. You can't use EIDL loan funding for the same window of time that you're using the PPP funding. So the majority of people are applying for the PPP loan first, since it has the 8-week window requirement, and since it is intended to keep people employed. And when that 8-week window is over, you can then apply for the EIDL loan if you need additional funding. Now, the EIDL loan will have to be paid back in full. There is no forgiveness provisions on the EIDL loan. And it's also subject to traditional SBA lending requirements. So you may not be able to get it quite as quickly as the PPP loan, but they're saying that it will still be faster than a traditional SBA loan.
Right. So like some of the differences you talked about, the SBA requirements includes a personal guarantee, right? Which the PPP does not require any personal guarantees.
Absolutely. You're correct about that, Don.
Okay. And then you can use, there's questions on there in terms of what can you use funding for. You can use the EIDL loan. So like there's a question on here, I see that if somebody is doing marketing for a company, could you use it to continue doing your marketing, for example? Could you use an EIDL loan for that?
Absolutely. An EIDL loan can be used for any traditional business purpose. Right. You can't take a vacation on it if you could get a flight somewhere anyway.
Yeah, you can they're cheap flights, but
maybe. I haven't tried to look.
Don't try to do that stuff yet. Don't do weird stuff with it. I know there's a lot of confusion too, because the idle loan has a component in it, the emergency fund component to it, that also got built in. So I know that creates a lot of confusion between the PPP and the idle loan. Talk about that emergency fund and the idle loan.
Okay, so one of the provisions of the idle loan is that when you apply, you can request to receive $10,000 as an emergency cash flow within 3 business days. Within that, if you are then subsequently not approved for that SBA loan or that idle loan, you do not have to pay back that $10,000. However, that $10,000 would then need to be deducted from any PPP loan that you were eligible for. So if you applied last week for the idle loan and you accepted it, you cannot utilize the PPP loan at this time, because you cannot utilize them congruently or at the same time. I have heard that the idle loan application has also been revisited, and that I actually don't have any clients who have been approved for the idle loan yet. So I think that they are attempting to keep people from making that mistake in error, because they're not aware of the order in which you have to do things.
Yeah.
But that $10,000, if you get it advanced, that comes directly off the amount that you will get in the PPP.
Okay.
So you cannot be forgiven for $10,000 for the idle loan plus the amount that is eligible for forgiveness in the PPP.
Right. Now, how much can you get in the idle loan, and what are terms looking like for that?
Oh, that's a good question. And I don't know. I challenged you yesterday to stump me, and I think you may have done it, Don.
I did it.
I actually don't know what the total amount of the idle loan eligibility is. So okay. I'm sorry about that. Okay. I don't know the total dollar value that each individual business is eligible to get.
The number $2 million hits my head, but I'm not sure if that's real or not. But definitely look for that.
I want you to know that 2 million is what I started to say, but I didn't want to make anyone excited in case I was wrong. So okay. Since that's both what we both remember, I think you're probably right.
I have no letters next to my name, so I've got nothing at risk.
You're still qualified.
Look it up. You can see that part of it. And then the terms they offer potentially some longer terms on it, but it's also kind of based on your credit rating, just like SBA loans typically are.
It most certainly is. Yes. Mm-hmm. So they are not saying that you will have to pay it back in a 2-year window. So we do know that's correct. On the PPP loans, that will have to be repaid within 2 years. On the idle loans, it will be much more like a traditional SBA repayment term.
Yeah, and with potentially even some really long-term payment options. I've seen like up to 30 years.
I've seen that too, but I've not seen it on any of the applications, so I can't confirm it.
Right. So watch that. So a lot of us who have already applied for idle loans, you may not have heard anything back from those. And again, that's the reason is because they may not want you to step in it in terms of PPP and idle and running those at the same time. So if you needed more money than the payroll protection plan program offers you, the strategy might be to take the payroll protection plan, apply it as soon as you can, maybe even retroactively if the bank will let you do that. And then if you need additional funds, then go after the idle loan. And that's a loan with no payback on it, with no forgiveness on it.
Correct. No forgiveness on the idle loan.
Right.
Yes.
So that's, if you're thinking about like, how do we spend money, those are things that you can look at in terms of both of those. So definitely out there. I saw somebody put in the comment line, it's $2 million on the idle loan. So
all right, we were right.
Since there's a comment on there, we're going to just call it
I think it's true. Yes.
It's right on. I knew I'd get you on something. So let's talk a little bit about unemployment provisions that are out there, because I think that fits into the calculus. I know a lot of folks have to, especially retail restaurants and things, are having to furlough employees for a certain amount of time. And we as owners, like you said at the very, very beginning, we do care about our employees. We do want to make sure they're taken care of. Talk about the expansion of unemployment benefits and what employees get if they are laid off.
Okay, so every state has different dollar values that they allow for unemployment benefits. So I'll talk about Missouri specifically just because that's where we're located, but the maximum amount that you're allowed in your state per week can differ. So in the state of Missouri, if you apply for unemployment, the maximum amount that you're allowed to get in a given week is $320. $320 converted to an annual salary is about $16,500. So with that being said, the majority of the employees make more than $16,500. So going on unemployment, when you are not allowed at this time really to hunt for a new job, is not going to provide much resources for your income. So the federal government has chosen to supplement unemployment for up to $600 a week for every person who applies. There's a big misconception, and I took a lot of phone calls about this yesterday, that people are going to want to go on unemployment and they're going to want to stay on unemployment because at $920 a week, that's about a $50,000 a year salary. And a lot of people don't make $50,000 a year. The misconception on that is that you still can't apply for unemployment for more money than you actually make. So if you have an annual salary of $35,000 and you convert that to a weekly amount, that is the maximum amount that you're going to be able to get in unemployment. So you'll get the $320 from the state of Missouri, or the amount that's whatever in your state, and then you'll get the supplemental from the federal up to $600 each week, but it's based on your current wages.
Sure. So I think the message there is strategically, if you have employees in that range, laying them off for a little while may not have that big of dramatic impact on them income-wise.
Absolutely.
So
Absolutely.
Plus, they're going to get the stimulus money too, just the check directly at some point.
They are, as long as they make less than $150,000 and they're a married couple, or $75,000 and you're a single person, you're going to get that $1,200. Plus, you're also going to get $500 for each of your children. The married filing joint caps out, so they do a reduction in the amount of your stimulus check between adjusted gross incomes of $150,000 and $198,000 for individuals. Once you hit $198,000, you won't get any money, but anything in that window, you'll just get a reduced amount.
Yeah. How long is those extra unemployment benefits extended for? Do you know?
I do. They're for 26 weeks right now. So traditional unemployment in any given state is 16 weeks unless there are special circumstances. Right now, they're saying that the additional unemployment is for an extra 10 weeks, which is 26 weeks total. Okay. That's not to say that they won't expand them again. There was a window of time during the recession where some individuals were eligible for nearly 2 years of unemployment. Unfortunately, at that time, it was still only the 300 and something a week. So it wasn't quite as lucrative as it is now.
Right.
But being unemployed is definitely not the goal.
Yeah. They're trying to get people off of that. So long term, I doubt that's a stopgap measure for right now.
I think so too.
Trying to give employers options to think about, okay, if I do lay them off, I'm not hurting the families that as much as I would have if they just didn't have anything, or if they're trying to live on $16,000 a year.
Correct. One thing I do want to mention, if you do end up furloughing or laying off any of your employees and they do have to go on unemployment, please recommend to them that they request that federal and state tax be withheld from their unemployment payments. So a lot of people do not understand that on their individual income tax return that they have to claim that unemployment as income. And a lot of people will choose to take the whole $920 if that's what they're eligible for. And then they'll go to file their tax return in 2020 and they'll owe federal and state tax on that whole amount.
Yeah.
You have to specifically request it whenever you go to apply for unemployment.
That's a great tip. And I think that all of us who own businesses and organizational leaders, you need to educate your teams as much as you can on this stuff. And even the folks that, you're going to be furloughing or laying off. So make sure you're giving them tips like that, offering them advice, because that's a great one. We know as business owners that you can get nailed on taxes by not planning, but employees are used to it just kind of coming out and it working out at the end of the year. So be careful of that. What about partial unemployment? Aren't there some benefits potentially? Can you claim partial unemployment for being laid off for certain times? I think I saw something about that in some states.
So if your income is reduced, you can apply for unemployment for the window of time that you are not working. So the answer to your question, Don, is yes. at that point in time, you would fill out the information and tell them that you used to make 30,000, and because of this, now you're only making 20, and you might be eligible in your state to get unemployment on the shortage of your income.
Okay. And that, if you go ahead.
Oh no, you go ahead, please.
I was going to say that in some cases, depending on how you're doing, if you go to that 4-day-a-week strategy or a 3-day-a-week kind of a strategy. Now, if you do the 3-day-a-week, the PPP isn't forgiven. So that's why you have to think of these things all together. But you could do the 4-day-a-week, potentially stay forgiven in the pay, and then your employee can claim unemployment for whatever they're missing on that salary.
They can. And there's also a lot of programs in different states called WorkShare that you can participate in with your Division of Employment Security. So there's a lot of different opportunities in terms of how you can package all of this together.
Yeah, we're going to go state by state now and talk about this.
No, we're not. No.
That would be brutal.
I'm not ready.
That would be brutal. There's been a lot of questions about the FTE count. So I want to go back to the PPP a little bit. So there's different time periods in which you're comparing your full-time equivalents to what you have now in terms of whether you've laid off people. Is that correct? And you can maybe have even some choice there?
So some businesses had more employees during the first 6 weeks of 2020 than they did in 2019. The loan applications that we're seeing right now are requesting 941s and payroll information for 2019 if you had it for the whole year. If you opened in the latter part of 2019, say August or September, then they're allowing them to provide payroll information for January 1st through February 15th of 2020. But in complete honesty, that is the reason that they have added the 0.5 to the calculation. So you're going to get average payroll at 2.5 times. And I believe that they think the intention of that within the CARES Act is that 0.5 will cover all those additional people. Now, in terms of go ahead, please.
No, go ahead. Keep going.
In terms of the total number of people who are employed and how they're going to utilize that number of jobs, there are 2 different sections within the CARES Act that give a little bit of confusing information. So one section says that you cannot lay off any of your employees and that you have to maintain the same number of positions or the same number of employees. Another portion says that you can't reduce your total amount of wages paid by greater than 25%. So in that instance, let's just say that we have 5 employees. If you were to lay off 1, you would still exceed the total amount of wages paid by that 75% if you were to maintain 4 full-time employees and lay off 1. So that is a determination that you need to work very closely with your bank on before you sign the PPP loan documentation. Yeah. Because the banks are going to be the ones who determine the forgiveness. So you need to have a very clear understanding with your banker on what they're going to utilize and how they're going to calculate it.
I mean, that's the punchline right there, is that the banks are determining the forgiveness. They've been given the guidelines from the SBA and Treasury Department, but they're the ones that at the end of the day are going to determine what those criteria are. And they should be giving you that criteria very clear up front.
Absolutely.
Because I know like another question came up is like, what if you have an employee, what if you're not doing layoffs, but an employee leaves during that 8-week period? They get another job or they go to someplace else.
I know there's been no guidance on that at this time, but I do not think that businesses will be penalized for employees who choose to leave on their own.
Okay. So that's something to definitely watch for. Keep talking to your bank about it. I think the key takeaway from all of that part is, I mean, first of all, talking to your bank. Second of all, if you have this really clear in terms of your account, a separate account, and it's very clear about what you're spending it on and you're communicating with your bank on a regular basis, you're going to maximize your chance for that being forgiven.
Absolutely.
Okay. And there's a lot of provisions. You mentioned before, like the $350 billion that are in the bill right now is for the forgiveness. So, I mean, it's possible that some of the latecomers to this could get the loan and then do all the things right and then it not be forgiven at the end.
It could be. I think that they'll likely do an expansion this week. Banks were estimating yesterday that the whole $349 billion would be utilized by noon today, but they're not allowing self-employed individuals to apply until next week on Friday. So I cannot imagine that they're not going to do some sort of expansion between now and that window of time, because otherwise there would be no reason for self-employed people to apply at all.
Right.
So I can't prove it, but I sure think they will.
This goes back to the saying we've been hearing a lot of people say. The bad news about this is everybody's impacted by this. The good news is everybody's impacted by this. So
right.
They'll have to make adjustments along the way.
We're definitely all in it together, but each individual business will have to determine all of the items that are available to them and the order in which they should apply them. You just need to know that you cannot use any of them simultaneously.
Yeah. So let's shift gears a little bit. This is a difficult one to share, but I know that sometimes, you and I both work with a lot of small businesses. Small businesses, oftentimes they're just struggling already. What message would you have to a small business that was going into this struggling and trying to figure out if they were going to still make this work or not? Is this an opportunity for them to get a whole bunch of cash so that they can now take off? Or is this something, or is there a point where you just say, look, it wasn't going to work there and it's definitely not going to work now? How do you go about making decisions like that?
Right. Well, I think that this is a really good opportunity for businesses to examine their financial statements with their local accountant or whoever they're currently using for tax preparation, if nothing else, to determine whether or not it makes sense to try to trim up expenses where you really didn't need to spend them to begin with. A lot of businesses are realizing that they were spending money on things that were just not a necessity. You get in the habit of doing it and you realize that you don't actually have to have it. In that instance, when this is over, you'll know if you missed doing that thing or not. But I cannot recommend to any business that you get a loan to try to make it when this is over. If you don't think that you're going to have a source of revenue and you didn't have one before, I would definitely not take out a new loan now.
Right. So be realistic about what revenue looks like. It's not going to, for most businesses, unless you're Zoom or Lysol or somebody like that, it's not going to be way better after this is over. Then it's going to be a slow recovery. This is going to have long-term economic impact. So
I think it will take a little bit of time for businesses to recover, that's for sure. But the point of the loans is just to try to get you through this window of time.
Yeah, okay. You and I have also talked about a lot of the business owners we know, whenever the times get tough, they tend to circle the wagons and are like, I'm going to do this and I'm going to show up, I'm going to put a brave face out to our team. One of the things we've been telling our clients is to be more vulnerable a little bit, like share with your team, hey, this is a struggle, this sucks, we don't like this, there is a threat to our business here, and here's what you can do to help us, and just share those things. But who should they have in their inner circles right now? What kinds of expertise, what kind of people should they have?
Well, obviously, I'm going to say that they should have an accountant, and you would definitely say that they should have a business consultant. But in this moment, your bank is going to be the very first person that you should contact just to see if you can apply and if you're qualified. If you don't know the resources that are available to you, you're not going to have the information that you need. But you're definitely going to want to pull in everyone from within your own office who you rely on, who's in a management or a director's role, so that you can look at the products that you're providing or the services that you're providing and see where there's an opportunity to, as a client said yesterday, make lemonade out of these lemons.
Right. That's great advice. Yeah. And that wasn't intended to be a pitch for us in terms of keeping advisors, but I think that a lot of times people have advisors that you're even paying, and I see them not engaging them.
Absolutely. It's unfortunate that so many people did not hear from their accountants previously. We contacted all of our clients over the weekend so that they would be ready on Monday morning to contact their banker. Sorry, bankers. But we wanted our clients to have all of the information available so that they would be able to make the most educated choice throughout the course of this week.
Right. So make sure, this is a good time. You'll know who your friends are. And they should be the ones that are supporting you and really working with you through this stuff. If you have an accountant who's doing more than just tax prep for you, and you expect them to be playing a major role, and they've never called you through this whole thing, I would look hard at that relationship.
I would too, Don. I would too.
To put that out there. So definitely think about who you can bring with you on this. You're not alone on this. Even your employees, your own team, people that you need to work with. I know it's hard to be vulnerable sometimes and to confront the reality of the situation, Because I know personally I've sat down and looked at the worst case scenarios and best case scenarios, and the worst case scenarios are really bad.
Right.
And they're not fun to look at, and you need a drink afterwards, and that's okay. But at the same time, if you don't confront some of those realities now, you can't leverage all these tools and opportunities that we've laid out here so that you can strategically figure out how to move through the business.
Well, and if you're just honest with your employees on where you stand and what you're trying to do and the things that you can do to try to help them through this window, because it's scary for them too. It's not just scary for the business owner, it's scary for them to make sure that they have food and shelter for their families. But if you're honest with them and you work with them as best you possibly can, I think it's so likely that as soon as this all turns around, you can bring your whole team back and pick up right where you left off.
Yeah, agreed. So let's end on a good note here. So as we think about these challenges, we've been talking about trying to bring in opportunities, keeping employees, cash, those kinds of things. Is there a silver lining on this? Are there lessons that you think that we can learn through this process? Are there opportunities? A friend of mine says, none of us would choose this crisis, but also don't waste a good crisis. Is there an upside to this situation?
I think it gives business owners a really good opportunity to dig into their financials and understand where they're spending all of their money and what their costs are.
Yeah. I think that's a great lesson too. Yeah. We see opportunities for people to bring their teams better together and work together, and even to think differently about the value you provide for your customer. This is going to be very disruptive to a lot of industries. So those who can get past this fear part, put a plan into place that's going to protect you so that you survive through it, but also to think about what you can do to innovate, to move forward, are the ones that are going to be the most successful. And so there are opportunities, I think, hidden into all of this.
I agree, Don.
Yeah. All right. Well, Crystal, I want to thank you so much for joining us and for what you do with your clients. I know you've been working super hard, and I know it's an incredibly busy time to get you on a webinar here, but I know everyone appreciates you being here. Thank you so much for joining us.
And thank you for having me.
Yeah. So I hope that this helped all of you who joined this to get a little bit better idea of the options you have moving forward. Engage your inner circle, utilize the resources that you do have available to you, and customize a solution that's going to help you to survive the crisis so that you can move your attention to what you can do to thrive afterwards and how you build value into the world. So thank you all for joining us.